Joining us now, Macquarie's head of technology research, Sarah Hindlian-Bowler. Sarah, thanks for being with us. What's going to be driving the tech trade for the next quarters, for the next year? Earnings were bumpy to weak, but the market seems to have taken it in stride. What keeps it working amid higher rates and a weakening macro?
Yeah, I think the market is clearly climbing a wall of worry, so to speak. And I think it just takes into account that, the stock market is a future price discounting mechanism. And so a lot of the concerns that we saw surface early on in Q4 earnings were fairly well priced in by the buy side. And so I think what you're seeing is, assets that need to be put to work in a rising rate environment. And people really looking at the software sector and evaluating it and saying it sure is impacted by the macro, much like all the other vendors and players in the market as well. But we continue to believe it's one of the best houses on the block with just a very high base of recurring revenues, great free cash flow generation, and improving profit margins.
When it comes to cloud and enterprise spending, though, Sarah, it feels like it wasn't all priced in, less resilient than the market thought, at least in terms of those growth rates from the hyperscalers. Has something fundamentally changed in the cloud story here that could lead to weakness later on? I mean, can we still say that we're in the early innings if it's so easy for enterprises to pull back on that spending?
So I don't know that it's so easy. I mean, a lot of the consumption-based products out there, such as the Azure and GCP and AW growth that we saw slowing, is contractually designed, so it's not as easy to cut back. But what these companies did
but in a consumption-based model, and you heard all the hyperscalers saying that they're actually helping their customers cut back.
Yeah, so it is an area where you can do some cost culling immediately, in particular where you're spinning up new workloads into your cloud infrastructure. I think what we also saw were certainly some project delays. But remember, some of this is also contractually signed for multiple years of usage. So we did see GCP pull back. We saw it fall from 38% growth to 32% growth in the quarter. AWS dropped all the way to 20% from 27%, which was a steep decel. And Azure fell to 31% from 35% in the prior quarter. And I think what Microsoft noted that's really worthwhile here is they saw slowing, in particular in the month of December, where growth rates towards the end of the quarter decelerated closer to 30%. And they're calling for another 4 or 5 point decline. So you are seeing some macro pressures here, but these are really sizable businesses at scale, and they're very diversified. So you would expect and anticipate to see them being impacted by the war in Ukraine and being impacted by inflation and rising interest rates.
I was going to say the Fed might be key among those. I noticed one large macro desk today added a 25 basis point hike to March as their baseline. They say that if we get another jobs print like we got on Friday, then you can start talking about 50s once again. I mean, how much is at risk when it came to that late thesis last week that rate volatility would go down and it would be an all clear to buy tech?
I think that there is still risk. I mean, I think that, we are still paying attention to the underlying fundamentals. And as you noted, Jay Powell is really determining where the stock market is going and what people are willing to pay for growth. The jobs report you noted was so solid, and I was actually very pleasantly surprised by it. So, the 25 basis point was certainly a breather from, the 50s and the 75s and the other, astronomical numbers that we've been seeing. So I think that, we're just going to continue to have to really watch Powell really closely, what he's signaling and what the Federal Reserve is signaling. But we take advantage of pullbacks in this sector because it is still so well positioned in the overall market and economy to really step into companies that we think are outstanding and want to own.